So, of course, we have our alphabetized look at the list. We also know we have two very fresh positions at the top of that list. You can see here the execution was today. Aussie Swissy and Aussie Kiwi, which are basically just flat right now, but they're pretty new positions. So we have 4 lots short the Aussie Swissy and 2 lots short the Aussie Kiwi. And the idea here is, yes, we want to take advantage of Aussie weakness, but we're still not seeing it. So it's really important that we pit the Aussie against something that is arguably stronger, which is why we've chosen the Swissy, which is why we've chosen the Kiwi, and even before, why we've chosen the Euro. So we have Aussie shorts on in a number of ways against currencies that are what we expect to be stronger. So let's start off with, and you know what, I might as well recap the Euro Aussie while I'm at it, and those would really round out all our Aussie exposure. Not to mention, though, we have our Aussie exposure by way of the Aussie Yen, Aussie US pending order, so I don't want to forget those either, okay? All right, so right off the bat, Aussie Swissy. Let's talk about it, what the setup is, what time frame, etc. So when I blow this chart up, you'll notice right away that this is probably a fairly fresh, I won't call it aggressive. It's aggressive in that it's on an established trend. So if we go through our market clarity criteria, three clarity criteria. Gosh, say that 3 times fast. Do we have the smoothness of the wave? Yes. Do we have, obviously the first question, the question before all the other 3 is, do we have an angle? And I think we do, 4 to 6. Is it smooth? Yes. Is it established? Not especially. Is it respected? For now it seems to be. So kind of a 1.5 out of 3. And that's not unusual when we have a fresh downtrend or uptrend. We have a fresh trending market. So what I want to keep in mind here is a couple of things that I think are in my favor. One, we've actually pressed down to lower lows every time. I like that. That bodes well for our short. I do know that at some point we could be talking about support way down in this area, which would be terrific. But I mean, we're far ways from that. But I do think we have the potential to go lower, even if not to that low, even to say this area here. Okay, which is kind of, if you notice, where we put in our current low at. So could we just go back and revisit those lows? That'd be fine. I don't need this market to make a new lower low just for me, which would actually mean taking out this area here, but right now we seem to be testing another area that was in play. So is it fresh? Yes. So all the hazards that come with a fresh downtrend, and by hazards I mean it's vulnerable and it's volatile. It's vulnerable because there may not be as many traders that are on the same page in terms of this weakness. It's going to be volatile because we don't really have a clear driver. I mean, I think right now we do more than before, but when it's fresh, when something is not established, more people will question it. Okay? I mean, heck, there could be, I always want you to think like you're, I don't know how many of you guys grew up watching LA Law and things like that, Law and Order. I want you to think like the opposite side of whatever you are. So if you're the prosecutor, you're thinking like the defense. If you're the defense, you want to think about the prosecutor. I loved growing up watching LA Law. I loved it. I think Law and Order obviously is a brilliant show. It's been on the air for 20 years? Something crazy like that. Well, how do we translate that to traders? Well, if I'm bearish, I at least want to entertain the idea of what a bull is thinking. And if I'm bullish, I want to entertain the idea of what a bear is thinking. And this goes back to the bulls and bears, buyers versus sellers conversation I still want to have with you all. And I might as well throw it in here real quick right now. So we talked about, and this actually video is kind of chock full of a lot of really key points. One is understanding that a fresh trend, up or down, is vulnerable and volatile. Understanding the market clarity criteria, going through the first question, which is, do we have an angle that I can easily identify? And then going through, if it's a trending angle, is it smooth? Is it established? Is it respected? And here we kind of said it's 1.5 out of 3, right? So coming to this idea of always being sure you can, at some point, kind of put your finger on what a bull might be thinking when you are bearish and what a bear might be thinking when you are bullish. And that's an ugly little pattern, but I think there will be people looking at that. So I'm just going to, I don't think it's an accurate pattern in terms of necessarily giving us insight into what's next, but I think there will be people looking at that. So I'm just going to draw that in. All right, so why do I say bulls and bears and not buyers and sellers? I want everyone to think about something that is very clear to any trader who has spent some time on level 2 in equities, say NASDAQ level 2, or looked at the depth of market on the YM or ES futures, or been to an open outcry pit. The idea that there are buyers at one level and sellers at another level is actually absolutely incorrect. There's always a buyer and a seller. There's always selling going on. There's always buying going on. The reason price action moves is where the deal is being done. That's a key part of understanding the movement. I'm less interested in buyers and sellers. In fact, anytime anybody tells me it's the buying and selling, well, that just tells me that mechanically they don't understand the market. So are there more buyers than sellers? That's a good argument. Are there more sellers or selling than buyers? That's a more accurate way of putting it. Okay, but I just rather use a completely different word altogether, bulls and bears, because that suggests the psychology of the movement. So again, every deal that goes off, and forget trading for a moment. Think about it, buying a car, buying a house, eBay. There's always somebody with something to sell, and you have somebody, hopefully, who's willing to buy it. And if there are more people willing to buy it, more buyers, the price will typically go off at a price that the seller would like. What is always a seller looking for? The highest price possible. What is a buyer always looking for? The lowest price possible. So where the deal goes off dictates the bullishness or the bearishness, the supply or the demand of the market. Okay? So that's why I say bulls versus bears, not buyers and sellers, because there's always buyers and sellers active. Maybe not at a particular price level, but they're always active. Otherwise, a deal would never get done. Who won the deal? Who got their way is what dictates ultimately the way the price action moves. So if I'm looking at any market right now, for example, this one here, the daily Aussie Swissy, what are bullish traders thinking about this market? What, again, kind of going back to this prosecutor, defense, LA law type scenario, I don't want to get so in love with my argument that I forget the other side might have a pretty solid argument as well. Down at this level, there could be some traders that are thinking, we've had support in this area before, I don't mind stepping in. Just like at this area, the selling was probably started by the bearish notion that this market is overextended, reaching resistance. It's at a level at which selling pressure overcame buying support. I mean, there's so many ways to phrase these things, but I do want you to understand the mechanics behind it. It's not just the buying and selling that moves the market. It's the demand or the supply behind it, and it's where the deal went off. So always ask yourself, what is a bull thinking that I may not be thinking as a bear? Because I am a bear here. What are the bulls thinking? Well, they probably have more fundamental arguments than technical right now, I would think. I think the best argument for a bull right now are these previous lows back in here. That's the best argument for a bull right now. The best argument for a bear, and all the reasons that we're short. Okay. So to Susan's question about where are the stops in this particular position, this is a swing trade, pure and simple. I have my entry, as you can see here. We actually entered quite conservatively, 95.50 area. Gives me a little bit more latitude. I also have the 9600 level just north of where we are, and it's also just beyond the 34 period EMA on the high, and the, as you can see here, 50 period EMA on the close. So the 50 period EMA is actually the 50 DMA. So if it's a simple moving average, and I refer to it as a DMA, it's just a 50 period simple moving average applied to the daily, hence DMA. So we're actually looking at a daily time frame where we can keep about a 55 pip stop. I had that luxury because I was actually relatively conservative, very conservative about my entry. In terms of pip movement range, I'm not going to concern myself with that right now. If we start trading above this is actually a 95.69. If we start trading into the 80 area, we start getting north of 70, I'll concern myself with that right now. For now, it's just a brand new swing trade, and I'm just going to see what it can do. But those are the stops, stop losses, and resistance that I'm watching. On the flip side, what about the downside targets? Well, these previous lows are actually going to be obstacles for us. So I'm going to mark all of them in my preferred lime green. See that? And then we have the lows down in here. Okay. So on the way back down, these are levels that I'll be watching. And actually, I should even just give this level here on the 94.80 level some respect, because we've recently bounced from that level. So that's the way I'm managing this particular position. And you can see the risk-reward ratio is really, even with the 94.80, it's still very much, even if I were to use this level here, 94.80 as an initial profit target, which I could, you see the stop is still giving me a very nice risk-reward ratio. I mean, super nice. Okay? It's still better than 1-to-1. So that's the Aussie Swissy, and I'm just going to try to see if this thing, let it work. I'm not going to concern myself about the risk side of things until or unless we get north of 95.70. That's going to be kind of a little warning track type resistance level that I'll be watching closely.